Hello everyone, welcome to the part 3 of technical analysis video series, and in this video we will be speaking how to trade with Bollinger Bands. So we have started our technical classes with Bollinger Bands indicator, and most probably this would be the last video of Bollinger Bands. So let's begin. So in this video, I will be actually speaking how to identify and how to actually trade with Bollinger Bands. So just to have a recap and summary of Bollinger Bands. So these are indicators which are used by traders in all kind of market conditions, stocks, futures, currencies. Now, as you would see, Bollinger Band actually has works with a calculation of a 20-day moving average and two standard deviation. So these two standard deviation on the upper side also there will be a two standard deviation, and the lower side also there will be two standard deviation, and based on that there is a band which is created, and this can vary slightly every day because it's a 20 days simple moving average, and simple moving average is nothing but the closing price of a particular stock. So calculation is pretty simple. Most of the times we have a lot of softwares and online tools from which you can identify it. But the question comes is how to identify and how to trade with these. Now, one common way of using this common strategy of using Bollinger Band is to identify overbought and oversold market conditions. So as you would know, a band is nothing but a range. Bollinger Band is a particular range from which stocks should be trading. Now, as soon as it crosses the upper band, you can trade it as a overbought zone. That means it has to come back in that in this particular range once again. Again, please do remember that these bands keep on this keeps on changing, because if it crosses the upper Bollinger Band, it's considered as overbought. So hopefully there is a sell position which is possible. However, there are two ways of trading this. So if it breaks the upper Bollinger Band, there is a very good possibility that it will come back to its band. Second way of doing it is, if it breaks the upper Bollinger Band with good volume, there is a very good chance that it would go higher. It would even go higher, and that's the reason, that's the time when you can actually buy it at that time, and with a stop loss of the band, because of the upper band itself. So let me show you with an example here. So if you go to charting, here is I have taken a screener here where you can identify stocks which has crossed upper Bollinger Band. So here you can change it futures or cash. So here I have selected futures. So for example, just style here. As you would see here, the Bollinger Band is 432 and 648, and as you can see 663 is the price. So if it there are two ways of trading it. Either you can actually sell it with a stop loss of 0.5 to 1.25%, and wait for the target of 648, or if the volume is really good, as you can see 14.5 million, which shows the trend is up and shows a good candle here. If this is the case, you can actually buy it with a stop loss of 648 here. Tomorrow, once the markets open, you will have to see this. So I'm just giving you an example here. So this is not a trade recommendation here. So what I'm trying to tell you here is there are two ways of trading it. One, if you are an intraday trader, if it has closed with good volume, there is a very good chance that it will go up. However, there is a trend reversal. You can actually wait for this particular target, or you can actually trade with calls and puts also if there is a very good volume, because there are chances that it will break one side. So as per the Bollinger Band theory, the stock actually has to come back inside this band of 648 within this range, and that is the reason. That is the reason how that's how you should take a trade. Again, if it has closed below the Bollinger Band, and that time just remember that, just see if the simple moving average, 200-day moving average, if it is trading above that. If it is, then you can take a position, buy position uh, with a stop loss of 200-day moving average. So especially as I told you, for traders, you will have to actually get used to it, to trade, how to trade. These are some strategies from which you can actually trade. However, for an investor, the best way to trade is if the stock is trading above the 200-day closing moving average, and if it is just below the Bollinger Band. So that means it shows that it has very good possibility to come inside the Bollinger Band, so it will go up. So this stock is trading around 430, but again, in this scenario, it is not. I'm just showing you an example. If it comes below that, that's a good place to buy, enter the stock. Just remember that it needs to be above the 200-day moving average, because that's generally used to trade for an investor, for whenever you're trading in stocks or investing in stock. So that's very important. So that's pretty much about Bollinger Bands. Both sides, you can use the strategy on both sides in that way. And but before that, just do paper trade, because it depends from these kind of strategies comes from experience, and there is no hard and fast rule as to you have to use it this way also. As I told you, if it breaks the upper Bollinger Band and you have a good understanding that it will go up, then always use the stop loss of the upper Bollinger Band and take a position. That's for short-term traders or short-term investors. So that's one way of doing it. Another way, I've already told you. In the same way, you can use it in lower side also, in the lower Bollinger Band also. So hope that is clear. That's pretty much about Bollinger Bands. If you still have any doubts or clarifications, feel free to check and ask questions. I'll be happy to answer them. So thank you, and I will see you again on my next part.